This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Ann Glover, Chief Executive and Co-founder of Amadeus Capital Partners. Amadeus Capital Partners is a global technology investor. Since 1997, the firm has backed more than 165 companies and raised over $1 billion for investment. They invest in consumer services, financial technology, artificial intelligence, cybersecurity, medical technology, digital health, and digital media. Ann, thank you for joining us.
Welcome. Thank you.
So what was your background before investing in early stage companies? What did you do before?
Well, first of all, I'm a material scientist, so I'm an engineer originally. And I then went to, from the UK, I went to business school in the US at the first year of the Yale School at MPPM. And I stayed there and I did 5 years in manufacturing and then I did 5 years in consulting. And I worked with large companies at both times, a large manufacturing company called Cummins Engine, which you may know in the US really well, and consulting. And I basically decided I preferred to work with small companies. And so that's why I decided to work my way into the venture capital world, because it allows you to work with our startups. And that's which I found the most exciting and the most ambitious and best possible business environment to work in.
Oh, great. So what excites you right now?
Well, I guess the digital transformation that has happened, the way the consumer world is seeing it in the use of digital technology for communication because of the COVID crisis. But actually, the main digital transformation is around the use of data. And so where the data is now being gathered explosively and then trawled and developed and for insight through the various machine learning models and AI models that can be used against it, is transforming the kinds of services that can be delivered. And so I actually think that's a more important trend than the comms trend. I mean, the comms trend is big and we all see it, but actually it's the AI trend that is much more significant. It's automating all and disrupting all kinds of verticals.
Oh, great. So you see a lot of startups out there and work with a lot of investors. What's your advice for people investing in startups, in particular the AI sector? What do you tell them to do before they write that first check?
Well, most startups fail. So that's the first thing you need to know. Even when you're a VC, it's almost 50%. So you've got to write more than one check. You have to write several checks. The second is that it's never one thing that makes a successful company. It's everything aligned. So you need to have a ready first customer, a large market, a differentiated product, a great and honest team. And you need to answer all of these questions because any one of them can lead to failure. And it's important that you have the whole suite in order to build a great business. Doesn't mean that the suite has to be completely there and visible. It just needs to be potentially there. So the team has to have a great couple of people in it who will attract other great people. But the market has to be demonstrated in one vertical or one region or one customer base, but it's very clear that if it takes off, it'll go into others. So I think you have to be quite rounded in your due diligence. And although you want to invest in several companies, then you need to look at a lot of them. So we're investing in less than 1 in 100, usually about 0.8. So if you want to do 5 investments in a year, you've got to look at 500, 600 deals. That's a full-time job. So I would say if you want to do this, great, but do it seriously and do it in volume.
So on the other side of that table, what's your advice for people running startups? What do you tell them they should do before they say go out and raise funding?
Well, they've got to answer all the questions I've just posed that the investor is going to ask. And then I think they've got to decide that they are going to commit time to this. I mean, a significant length of time. In other words, it's not just let's try and see. And if it works, if we get some money in a few months, then I'll do it. It's like, okay, this is going to be the next, if it's successful, the next 5-10 years of my life. But even if unsuccessful, I'm going to commit 2 years to trying to get this off the ground, because it's hard. And without that level of determination and frankly, support from your family and support from your colleagues, it's just not possible.
Great. So let's talk about the state of investing in startups. How do you see the industry evolving today?
Well, evolving. I think that the barriers to entry are quite low now. I mean, you can dial up pretty much in tech almost all the services you need to start a company, whether it's AWS or any kind of service, whether it's HR so the barriers to entry are low. That used not to be the case. You used to have to buy your own, equipment and take out an office and do all this. And now none of that's there. So it means that there's a lot of startups. So that means that the story and the business model and plan that you're developing has to be compelling, because there's way more people trying to start companies than will actually succeed in either getting them funded from the get-go or even growing them. So it's spending the time to really hone your idea and build a small team that you can start working with who together will launch into this enterprise on your own.
And what's the biggest change you see coming up in the investing world?
What's the biggest change? Well, I suppose it's the rise of the corporate investor. The friends and family have been around for a long time, and institutional venture capital's the next layer, and it's been around for a long time. And it used to be that corporate VC was always much later stage, more Series B onwards. And now what's happened is that, corporates recognize that innovation happens outside their own borders and boundaries, and that they need to work with startups and scout, frankly, the globe, not just their local region, to find interesting startups. And so they're building real teams who can go down into seed activity. And some of it's just through accelerator programs, but some of it's real money. And so I think the rise of corporate VC is a significant trend and should not be feared.
Oh, great. And so what's your investment thesis? What do you look for in a startup?
Oh, well, I've told you. We look for a great team, a differentiated product, early customer interest, if not traction, and a big pain point that means there's a big market opportunity. That's pretty straightforward. It trips off the tongue. It's actually hard to do.
Yeah. But do you require revenue? Do you require a certain amount of revenue before you'll invest?
No. We have multiple funds. We have a seed and early stage fund, seed and Series A fund in the UK. We'll write a 50,000 sterling check to two guys who've got a good idea. But we've also got growth funds in deep tech in Europe that will write $25 million checks that are to companies that are on their way to IPO. And we also have an emerging market fund that's looking at the digital transformation in emerging markets. And there we'll write big checks to growth companies. So the further away we get from our home base, the later stage we go. Mm-hmm. But we want to invest globally because we think good ideas happen everywhere.
Great. Can you talk about one or two startups that fit your early stage thesis?
We've got one that we closed recently. Well, we've got one in quantum computing, which is obviously quite bleeding edge. But in this particular one, it's called Riverlane. We invested in software for the quantum computing industry. There are actually quite a few hardware platforms, all very varied, but in their approach. But all of them need a software layer to actually take the information out of the quantum computer and begin to manipulate it. So this company has developed that layer and is now partnered with all 8 quantum computing hardware companies in the UK and probably 20% of the world's quantum hardware producers. So we think that's very interesting as an area. It's very early, but it's absolutely revolutionary. So we're excited about that. At completely the other end of the spectrum, we've invested in a new approach to manufacturing CAR T cell. CAR T cell therapy is a way of treating cancer that has a certain specific cancers. It's where you basically extract cells from the individual and genetically repurpose them and then inject them back in a way that treats the cell by creating an immune response. And that therapy is incredibly powerful, but very expensive and very large in the way the sort of manufacturing processes. And we found a team who miniaturized the process and made it effectively possible to do that right next to a hospital, as opposed to sending it away and doing it in a central processing facility. So that's actually, I mean, it's really weird. We would hardly have thought that we were going to invest in a manufacturing or a new manufacturing process, but it's such a high value manufacturing process. It seemed like it was worth it for us.
That sounds like a very good one. So a moment ago, you talked about AI being a great disruptor and so forth. What are the challenges in the space for startups, say in the AI industry? What do you see them struggling with the most to make that company successful?
Well, it's access to data sets. I mean, that's really the problem, because it's garbage in, garbage out, and you need to have access to high quality data sets. And startups, it's not that you necessarily have to pay for them, it's that you have to be credible or people won't share their data with you. So I think that, so a startup who's figured out how to negotiate and get access to the key data sets that are important to its activity is one that really commands our attention. For example, we just announced, I think yesterday, an investment in a New York company called Altana that has access to global trade data and is doing some very interesting AI work on that, which can give you a signal in order to determine whether there is either fraudulent shipments or actually, for customs and borders protection or for insurance and what they have, apart from a great team, which is they have great access to great data.
And then, so on the investor side, what are the challenges you see most investors struggling with today?
Well, I think it's selection. It's sifting through the volume. So I think that most investors, I would advise them to pick and research a theme that interests them and then go looking for companies within that theme. If you just are like a whale and open your mouth and just take in everything, it's impossible to both to know enough about all of the sectors that you'll be addressing to know what's good and not good. So I think you basically need to develop some interest. And there's a lot of information out there for you to learn about it, whether it's environmental that you're interested in, or it's AI, or it's healthcare. Choose a vertical and become knowledgeable. You don't have to be expert. You have to be knowledgeable about that particular theme. And particularly if it can be one of great personal interest, then it becomes really enjoyable. And you can be the world's most boring dinner host because you're talking about it all the time.
Great. Well, we talked about AI being a great sector to review. Are there any subsectors or specific applications within AI that you think are good opportunities for investors to pursue today?
I would stay away from commerce. I think that's done by the big guys. I think fintech writ broadly is interesting and likely to be quite fragmented, and therefore you can build a niche winner quite easily, whether it's in wealth management or payments is probably over. And we've doubled down on voice recognition 3 or 4 times because that has been an area of great success because we've got great universities here that specialize in both voice recognition and voice synthesis and dialogue management. So we've done a lot in that. But I would say it's anywhere where there are new large data sets emerging. Part of the reason I say fintech is that there is a trend started by the UK towards open banking, which means that you can get access to data on people's bank accounts, both the transaction flows and balances. And it's obviously permissioned, so nobody's going to give you that for nothing. But but you can then use that really credibly to improve your, for example, credit scores. I mean, as I understand it, even Amazon has now insourced its credit scoring. It's not using external credit scores anymore. And I may not have that right. I was just reading it somewhere. I haven't spoken to anyone at Amazon to know. But I do think that where there are new data sets emerging, then I think there's exciting opportunities. So that's where I would point people.
That's a good point. Follow the data sets. If you have data, you can do AI. If you don't have data sets, you can't do AI. So
yeah,
that's
exactly.
an interesting model there. Well, in the last few minutes that we have here, what else should we cover that we haven't?
Well, I think I'd like to be encouraging in the sense that for a long time, I've lived in the US and in Europe, obviously, and for a long time, the US venture model and US VC was seen as the pinnacle of everything. And in many ways, it still is. And it was very concentrated in Boston and Silicon Valley and now indeed Austin. But I think this availability of resources and talent that I talked about, in other words, you can dial up your access to your cloud computing wherever you need it, or means that startups can start anywhere. And the anywhere includes Europe, by the way. So we've got some great examples of multi-billion-dollar companies emerging from Europe, not just Spotify, which you will know, but Klarna in payments and several in fintech like Revolut and TransferWise. So we can build unicorns from Europe, but you can do it as well, or the US can do it in regions of the country that are not traditionally clusters of venture capital. So I think it's not democratization, it's more you don't have to be in a cluster. The clusters are really helpful for particularly talent, to attract talent and build an organization. But if you want to go and start something in Denver or you want to start something anywhere, North Dakota, I don't care, you can usually start it there. You might need to move it if you need a big workforce, but I would say startups can happen anywhere. And I suppose the last thing that I think we all need to worry about is, and I don't think it's in a negative way, is we've got to recognize that China is not a copycat anymore. They're not copying what we do. They're inventing, and they're doing it really well. And so we need to respect the Chinese players as real competitors and all that goes with that, which is fear them and collaborate with them at the same time.
Well, those are good points. So how best for listeners to get back in touch with you?
Just the email address. I only have one. It's available. I don't know if it's on your website or...
Yeah, we'll put it on the show notes, aglover@amadeuscapital.com. So anybody that wants to get back in touch with you, they'll be in the show notes, but it's simply aglover@amadeuscapital.com, I believe.
Yep, that's right.
Great. Well, we'll put that plus your website in the show notes, and want to thank you for joining us today and hope to have you back for a follow-up soon.
Thank you very much, and happy Thanksgiving.
Thank you so much.
All right. Bye.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.